Okay, so we're live. Good morning, traders, and welcome to today's live market analysis. I'll be your host, Emmanuel, on behalf of FX Space. And I apologize, we haven't done this in a while. It has been some time since we've done this, so we're back now, I guess. And I don't know, how's your trading been so far? Hopefully, it has been profitable. And more importantly, we're heading straight up to our chat. Sorry, we apologize for any form of technical difficulties that we met so far in the whole process. Okay, and we are back. Sorry for the sorry for the technical difficulties. We're getting that fixed at the moment. Um, I don't know where you have been, but if you've been alive and been on planet Earth, you have noticed that there is serious geopolitical tension going on in Russia and Ukraine, and that has affected the markets in some really, really bizarre ways. Like you can't even begin to imagine the price of commodities such as crude oil has skyrocketed, and we're here in the chat. We're going to look for opportunities. Last week, there was a huge sell-off, and I think that occurred so that crude oil and all those commodities could breathe. And now they are done breathing. Now that they are done breathing, the markets would continue. So we'll quickly head off straight to the charts. Just hold on, give me a second. I apologize again for the technical difficulties. And finally, we can head off to start sharing our screen. Without further ado, let's head off with our screen. So let's see what we are looking at. And if you can see my screen, I'll assume you're looking at GPY index. If you've been trading, you will notice that the Japanese yen has been selling off. They've been dumping the Japanese yen for the past, let's say, since 3rd of March. And throughout this month, they have been dumping off the Japanese yen. And what is the main cause? I don't know how to. Usually, when there is uncertainty in the market, investors look for safe havens, and unfortunately, JPY, which is the preferred safe haven, is not acting as a safe haven right now. Okay, so and this is the JPY index, and we'll see that the market has been active downtrend. There's no sugarcoating it. And let's go to our trend line properties. Let's remove you for monthly. Leave you in M15, H1, H4. Let's daily. Let's leave daily. So now you can clearly see that the Japanese yen has been selling off, and it has now come back to retest the weekly low or the monthly, or not monthly low, but one of the lows from 2015, where it touched here and the market rejected. The market came from this sell-off, touched here, touched this point. The market touched this point and found support, came here again, touched this point, and it bounced off. So now again, we are here testing this. We're here testing this point. and we're anticipating a reaction from this point. Now, this is the monthly time frame build up. This is what it looks like monthly time frame. Um, okay, so what was I? So this is monthly. Let's work the breakdown down to weekly. And you see, for the past 3 weeks, the market has been dumping down, but the market is also acting in a channel. And this is, if there's anything like a textbook channel, this is a textbook channel. Hold on. Now, some of you will ask why I picked out this, why I didn't pick my trend line from this high and this week here. When you're picking a trend line, you're looking for where you get the most touches. And what this tells you is like, the week tells you like, yes, the market came here, but the market rejected. So it didn't really close there. So yes, it's clearly a point of an extreme, but if I picked these places, I'll have only two touches and my market will be dancing. But picking this other week inside and here, picking here and here, I have market actively touching my trend line. So that's telling me that this downward channel is working. And so we have what is referred to as a confluence. It's where more than one form of analysis comes together telling you the same thing. If you're what's it called, if you're trading basic support and resistance, just horizontal lines, yeah, that's what you're called, horizontal lines, you will see that you have a support here waiting for you. Sorry, you have a support here waiting for you. If you're trading a channel, you have a support here waiting for you, and this is just in weekly. So let's do our breakdown back down to daily. And in daily, you now notice, pardon, let's drop this. In daily, you now see that the market is now actually acting in a channel and it has come to the bottom of the channel, creating strong, what is it called? Confluence here. So now, when there's confluence here, what are we looking for? This is GPY index. The market, we're hoping that the market will find support because when the market is basic physics. The market is in motion, and when the market is in motion, it has to take something to change that direction of its motion. There has to be an external event. Now, we're hoping whatever it is, we don't know what it is, but for now, if you're just going by technical analysis, we're anticipating a support zone here that would bounce off the JPY index. Now, a lot of you might not know what the JPY index is. It's like a weighted basket of the Japanese currency against a couple of other currencies. So I don't know the exact makeup of the JPY index, but I assume that the dollar has a large percentage. The Australian dollar also has a large percentage. Now it now leads me to look at Aed Jpy. Let's quickly look at Aed Jpy. For Aed Jpy, I'll be looking at 91,500. This is Aed Jpy. I'm looking to get to 91,500. At 91,500, I'll consider what Aed Jpy would do. This is the H4 time frame. Let's head off to daily and zoom out. I don't know why this guy is slow. Okay, pardon, I think my network is a bit slow. Problems of trading in Nigeria. Your network sometimes can be lagging. Well, AED AED has been in a, what is it called? Ascending triangle and hold up. And finally broke out of the ascending triangle. And we're waiting for it to do a pullback at least. You see, when the market is this steep, whenever I see a market this steep, it's not, this market at almost 80 degrees. It's trending at 80 degrees. It's not normal. The market should never be this steep. So at some point, we're looking for a reversal, a breakdown of the market that will bring it back down. So maybe somewhere around here, we're hoping for 91,500, a pullback at least for that. That's what we're looking at for Aed Jpy. Then elsewhere, that's for the JPYs. Let's leave JPYs alone. Elsewhere, let's look for opportunities elsewhere. The Gbp index. Oh wow. The Gbp index. Yeah, I don't like what the Gbp index is doing. I won't sugarcoat it. The market looks as if it had formed. The market looks as if it had formed a shoulder here, a head here, and alas, another shoulder here. And market has made the first swing and it's coming back to retest the neckline of this shoulder. Now, I was really hoping that because I'm currently selling GBP and I was hoping that maybe to come back to retest somewhere here, but we're still watching. But for me, the GBP index technically looks as if it has created enough for a buy. Then fundamentally, it's as if investors are ignoring what they're seeing. So last week there was a interest rate decision last week, and um yes, they increased their interest rates, but they increased it by only 25 basis points from 0.50 to 0.75. And yes, there's an interest rate increase. So we expected the market to buy. And when that happened, the market didn't buy. If anything, the market sold. And maybe it was because there was an 8-1 vote instead of 9-0. There are 9 members of the Bank of England board, and sometimes the vote has to be unanimous for the markets to believe that everybody's from the same standpoint. But I guess the vote wasn't unanimous. Then the CPI figures, their inflation figures came out yesterday, and to me they came out, what is it called, hotter than expected. But however, it seems as if it's not hot enough to make the Bank of England change their standpoint. So that is another thing we're worried about and we're watching. But for me, the GBP index can easily, that move yesterday can easily turn to a fake out and the market will buy. So the market could buy from where it is. I had to just check something. Hold on. So that's it for the index. These are the only index I'm looking at. I'll look at the dollar index. Dollar index is currently squeezing. It's trading perfectly in an upward channel, but right now it looks as if it's squeezing in the pennant. And the funny thing about pennants tends to create, or they're bilateral chart patterns. That's what they're called. A pennant is a bilateral chart pattern. And on daily, it looks as if the dollar index is squeezing itself into a pennant. The thing with a pennant is that I don't know if you have pressed a spring into a corner. Think of pennants like springs. You twirl them and you twirl them. The market squeezes itself and coils itself and it coils itself until it snaps and it breaks in one direction. It can break upward or it could break downward. It's anyone's guess. But it's anyone's guess. But with the current geopolitical um tensions going on in Ukraine and Russia and America dropping sanctions here and there, is literally anyone's guess. So we'll just be watching. As we have stated before countless times on this channel, trading is reactive, not predictive. So we wait for the markets to simply break above and do a retest or whatever direction the market decides to break above. Now, without further ado, let's head up straight to where I find the market to be interesting. So we'll do a breakdown of Brent cash together. This is the price of crude oil. If what's it called? I'm a chart pattern trader, but then again, sometimes you have to. Sorry, you have to pay attention to a few indicators here and there. But I'm pro chart pattern. I like myself in naked charts. It's easier to work with. But since whenever I do my analysis, I have to have the 50 MA. Think of the 50 MA as a decision line. Above the 50 MA to buy for the industrial, for the bigger boys in the market, for the institutional traders. Above 50 and 200 moving average, the market is a clear buy for them. And below it's a sell. So just think of that as a decision line. That's what you think of that. And crude oil is currently sitting above 50 and 200 MA on the daily. What color should we make our 200 MA? Let's say our 200 MA is deep sky blue. I like blue. So now let's go back down to monthly. When you're doing your analysis, whenever you are doing analysis, ever, you always start from top down analysis. Always start from the top to the bottom, always. So from this case, our top now is currently the monthly because very few trading platforms offer yearly. But so far, since Russia invaded Ukraine on February 20th, the market has been buying crazily. And weekly, the market pulled up after buying. There was a gap. So let's start pointing out levels of support and resistance. That's the first thing you do. You point out levels of support and resistance. Okay, so we have we have drawn our levels of support and resistance. That's what we've drawn. And we can see that the market is acting on an active trend line. And I spoke about confluence earlier today, and we could see that if you're trading support and resistance, there was a confluence here, and markets came to sit on 50 MA, creating another confluence. Now, my view, if you were in our last analysis class on Sunday, you'll have seen that I gave a fair market breakdown that after this morning star here, because the market has been creating textbook moves. This is a textbook morning star. This candlestick formation where you have a bearish sell. Okay, I don't have the strength to start. You have a bearish sell, all bearish, maybe some form of indecision, doji, whatever, followed by a bullish move at a support. Whenever I see something like this at a support, that tells you it's market. The candlesticks tell you a story. This tells you of a potential end of a downward trend and what's it called, move in the market. So we had this after this gap, we had the market came to fill this gap, did this downward push. Sorry, did this downward push, and it had now printed this morning star formation here, and the market started buying. So now we're looking for me, I think I think crude oil is going to sell massively at some point in the near future. But then again, I think the market has to come back to retest this high. So we'll be looking to short crude oil when it gets to anywhere from 128 to the high of 131. And you will ask me why I didn't just take it to that week. That week is an exception. You could do that, it's fine, but I'd rather use this close. I'd rather use this open of this candlestick. Yeah. And if the market gets above here, then we'll know that yes, the market is stretching and we'll be looking to enter our sale. Well, for those of you that will come back and text me, let's just do this. And hold up. Okay, that's what's up for now. So we'll go to a smaller time frame and look for opportunities for these markets to continue buying. I've told you that whenever you have a steep uptrend, like what we had here, those are 64 degrees. It's quite steep, Seth. It's not healthy. The market will usually correct it. So here in this case, we're having an uptrend and it's not so steep. So okay, it's quite steep, but I think the market will continue trading on it for a while until it gets to where it's going to. There was a gap here. The market has filled all necessary gaps, so the market is looking quite healthy. Now, I repeat, I would not ignore the formation of this candlestick. I wouldn't ignore the formation of that candlestick. That is telling us that the market can easily come back to retest this zone. So we wait for a bounce on here and the market can come back down. There are so many zones in the market. I think the problem with traders is that they don't take their time to do analysis. So that's why we're here for you. Please feel free to subscribe to our YouTube channel. As long as you're watching this, I sure you subscribe to this YouTube channel. So for crude, my analysis for crude is that to continue buying till maybe here, and we'll be looking to short it from here. Well, for now, there's so many reasons to buy crude. There's currently a war going on in Ukraine and Russia, and Russia is probably the biggest supplier of crude oil, and that is not an OPEC nation. It's the biggest supplier of crude oil that is a non-OPEC nation. After Russia, we have Canada. Now, the US has decided to put sanctions on Russian oil, so maybe the Russian oil would not be that much in the market again, and supply will go down, and they'll have to do a lot of politics to get other OPEC nations to increase supply and whatnot. Last year, when let's zoom out. Let's give you perspective. When was last year? 2022. Last year when crude oil was at 83, everybody was screaming that crude oil was too high. And a certain investor I was following, they on Bloomberg, if you follow Bloomberg, they do yearly outlook the beginning of the year. And he had this crazy idea that crude oil will hit 120 by the year's end. That is, well, this is the first quarter. We are barely finishing the first quarter, and crude oil has already tested 130 and has come back to 90. So let's see what happens. Maybe the market comes here and does a double top for us and gives us a clean opportunity to go back to a healthy market where the price of crude oil is, well, it's still expensive, but at a better point. We don't know. Mm. Then we'll head off straight to the stock market. Let's do this quickly. This is US 500, and on the weekly time frame is looking okay. Let's see the issues when you do analysis and you keep on leaving your candlesticks and trend lines in the wrong time frame and no longer need you in this time frame. So maybe showing H1 and H4. U2, maybe H1, H4. Okay, so it looks a bit clearer now. Now, this market, the S&P 500 is the meaning of forever uptrend. As long as the American economy is doing fine, the S&P 500 would eventually do fine. There will be corrections that will shock the markets. There are dips. The meaning of buy the dip, the statement buy the dip that's currently popular in the crypto market actually came from the S&P 500 because of the ideology that whenever there's a dip, the S&P 500 bounces up stronger and better. This dip you're seeing here happens to be before the coronavirus. This was the high of before the coronavirus. This was the high of the S&P 500. The S&P 500 was trading at 3,386, and then the coronavirus came. It came like a witch, and this happened. The world panicked and they dumped shares, and all of a sudden nobody thought that the S&P 500 will recover. Here we are. The S&P 500 has recovered again. Now there is the market participants have been analyzing that the market is overdue for a sharp correction. Maybe this was the sharp correction because last week the market came with a very bullish engulfing to engulf the market, and maybe it's not a continuation. Nobody knows. But for now, for now, I would wait. I'll wait before I make any decision because it's quite unclear. The Federal Reserve of the US government, that is their version of the central bank, is starting to say that they are going to move from the accommodative post-pandemic, the accommodative pandemic monetary policy that they enacted to help keep the American economy alive. They kept on pumping money into these companies to keep them alive. So they've gotten to a point where they're like, maybe these companies are a little too fat. So maybe, just maybe, we can tighten up our monetary policy just a bit. So during their last Fed meeting, they hiked their interest rates by 0.25%, which is 25 basis points, which is okay, but the market expected more. So maybe the dollar didn't move. They kept on announcing it. They said that they will keep the market informed. So avoid market shock. They will always try to keep the market well informed ahead of any rate hikes. So, and they kept true to their word. During the pandemic, when they were, what is it called, giving stimulus, they told the market that they'll keep them well informed before they take out the stimulus, and they kept true to their word. So maybe, just maybe, Fed Chair Powell is doing the right thing, and we'll watch and see. But for now, since that he has decided, they started announcing that they are going to be slightly less accommodative, maybe investors will be looking to put their money where things are slightly more accommodative, but it doesn't look as if it's any more accommodative anywhere else right now. The German DAX has been selling. The Euro 50 is looking like it's going to sell. The FTSE 100 is looking like a bear market for me. So nobody really knows for now. I think everybody is still cautious about the geopolitical tensions in Russia and Ukraine. So with that said, and seeing as I have a class by 2:30, I'll bring this live analysis to keep you to an end really soon. Um, and it was a fake out. All right. I'll quickly run through BTC. Lord, my chat looks clustered. Let's delete what we don't need. Okay. So my bias for what is it called? Bitcoin is it's ranging for now. It's going through an accumulative phase. So of the buyers are between 45,000 and as low as 34,000. Bitcoin will continue to range. It's it's doing some interesting things while it's ranging, but for me, it's still ranging. It's only a break above 45,000 that will let me know that the market is willing to be engaged for a buy on a pullback. And a break below 34,000 that the market will be clear for a sell, but that sell will be to 28,000 at least. From 28,000, I have pending orders to buy Bitcoin from here. So we're looking at this is this is daily time frame. So let's work our way down a bit. The market is acting. Huh? It's just acting actually. A lot of this can be removed. So for now, it's in an uptrend. There's no magic. The market is a bit clustered. I'll be looking to sell with a ranging market to sell at the high and you buy at the low. Ranging markets make trading slightly easier. So maybe this market comes back to 45,000 by Friday. Today's what? Thursday. You could buy it then, but I'm not really interested in the buy. So maybe it comes to 45,000 or anywhere between 45 to 45,500. We'll be looking to sell it back down until it takes it out. And if it takes it above, if the market breaks above it, then fine. If it doesn't, then gives us a reason to sell from here. We'll gladly sell these markets with pride. Well, with that, let's bring this meeting to a quick close. And if you're new to FX Space, you could follow us on Facebook at FX Space, Instagram at FX underscore piece, LinkedIn at FX Space. You can easily go to our website and open a live trading account. Please at www.fxspace.com or like our YouTube page at FXSpace Global or call any of these hotlines. Please, please, this is a disclaimer. None of this, nothing that was discussed here should be taken as trading advice or an investment advice. It's just a market breakdown. Trading is risky and you can lose all of your capital. Thank you very much. Have